Welcome to our deep dive into the sometimes hidden psychology behind, money decisions. Today we're tackling Morgan Housel's The Psychology of Money. We've got like blogs and book reviews to dig into, even someone threw in a YouTube video. Our mission, to figure out the, often confusing ways we think about money.
Yeah, it's really cool how this book goes beyond just like the numbers, it digs into those less talked about things that really impact financial success.
Yeah, that's totally what grabbed my attention too. It's like Housel argues success is more about behavior than smarts, right? Am I reading that right?
Totally. In fact, he says, doing well with money has a little to do with how smart you are and a lot to do with how you behave. I mean, that kind of reframes the whole game, doesn't it?
For sure. So if it's all about behavior, then like understanding our own relationship with money is key, right? Like those experiences, good or bad, that kind of drive our choices now.
Absolutely. Like one blog post here talks about how people who lived through crazy inflation back in the 70s, they'll probably invest differently than someone who, grew up in a stable economy. It's like their idea of normal risk is totally different.
Right, like if you saw your savings wiped out by inflation, you'd be super cautious later on, wouldn't you? But Housel also uses some pretty strong examples to prove his point, right? There's something about Bill Gates.
Oh, yeah. He asks this question, like, could Bill Gates have made it so big without that crazy luck? Like, going to one of the only high schools with a computer back then, it really shows how much luck and risk are tied together.
Whoa, yeah. It really makes you think, huh? We often just think it's all about hard work, but chance plays a huge role too. Didn't the book mention, like, a friend of Bill Gates? Someone super smart, but things turned out totally different for him?
Yeah, a guy named Kent Evans, he tragically died in a mountaineering accident, right before Microsoft blew up. It's really sad, but it shows that even with all the brains in the world, stuff outside our control can really change things, especially when it comes to, money.
It's a good reminder that good and bad luck, well, it all plays a part. It kind of makes you humble. It reminds me of this idea from a bunch of the sources about how slow and steady wins the investing race, the whole compounding thing.
Oh, for sure. The book and even that YouTube video are all about that. It's not just about returns, it's about time. And that's where so many people trip up. They're looking for the quick win instead of the, like, long game.
Speaking of long game, that stat about Warren Buffett, like 96% of his wealth came after 65. Mind-blowing, right? Shows you patience is where it's at.
Seriously. It proves that small wins over decades can really snowball. One blog used this, well, interesting analogy, like ice ages.
Ice ages. Hold on. How do ice ages connect to money success?
Think about it, those huge ice sheets, they're built by tiny snowflakes falling for centuries, right? Small, steady investments can be like that. It's about resisting that urge to chase the next big thing.
So starting early, even with small amounts, Trump's trying to score big later on.
You got it. The snowball effect, I know. The sooner it starts rolling, the bigger it gets. But this whole idea of slow and steady wealth, it kind of takes us to another thing Morgan Housel talks about. Enough.
Enough. Okay, I'm listening. So is he saying, like, we need to figure out what financial freedom really means for us? Individually?
That's it. He's all about the real value of money being freedom and options. I read this quote in one of the blogs that stuck with me. It said, money's greatest intrinsic value is its ability to give you control over your time. The ability to do what you want, when you want, with who you want, for as long as you want, is priceless.
Wow, that's powerful. So much of what we chase financially comes down to freedom, doesn't it? But it also shows how different enough can be for each person.
Absolutely. Like for you, freedom might be early retirement. For someone else, it's travel or just knowing they can handle any curveball financially.
Right, so knowing our values and what matters most is crucial for figuring out our own enough.
You nailed it. And one thing Housel points out is that a lot of what we think is wealth is actually just for show, being rich versus truly wealthy.
Hold on, I'm lost. Isn't that the same thing? What's the difference?
Okay, so being rich is the flashy stuff. Fancy cars, clothes, basically trying to impress everyone, even if it means debt or sacrificing the future. Being wealthy is the real deal. Financial freedom, security, living how you want without stress.
I get it. One's for show, the other is for real peace of mind.
Exactly. And this blog post I read summed it up perfectly. It said, spending money to show people how much money you have is the fastest way to have less money.
Ouch, but true. It's so easy to get caught up in wanting more, more, more. But how do we avoid that trap? How do we build real wealth instead of just chasing a fancy facade?
That's the key question, and it's something Morgan Housel really dives into. But before we go there, let's step back and look at another fundamental part of this whole money psychology thing. The fact that, well, we can't predict the future.
That's a sobering thought. especially when it comes to, something as important as our money. Is this about that quote, things that have never happened before happen all the time? That one really hit me.
Yeah, that's the one. It reminds us that the world is full of surprises, especially the financial world. We try to plan for everything, but honestly, we just can't.
So then how do we make good money choices when it feels like everything's constantly shifting?
That's where we got to move from trying to control everything to building resilience.
Okay, I like the sound of that. Resilience. Sounds a lot more doable than like predicting the future. How do we do that though? Build that resilience.
Well, first, we got to admit that we're not in control of everything, except that we can't see every outcome and learn to roll with the punches. But the big thing, it's about having a strong base that can handle those shocks and surprises.
So instead of trying to time the market or chase the next hot stock, we should focus on a portfolio, like a plan that can handle those ups and downs.
You got it. Imagine building a house in, say, a hurricane zone. Got to make sure that foundation is rock solid, can withstand the strongest winds.
This is making me think about my own choices in a whole new way. Maybe I should focus less on getting the biggest returns and more on like minimizing risk.
There you go. That's a great takeaway. And it kind of leads us into another big idea from Housel's book, understanding your own risk tolerance. But that's a conversation for part 2 of this deep dive.
Welcome back to our deep dive into, all the psychology behind money. Before the break, we were talking about like building that resilience when things are so unpredictable. It's making me think a lot about how I handle risk.
That's actually a perfect bridge to the next big idea from Housel's book. He's all about knowing your own risk tolerance. It's not a one-size-fits-all thing.
Yeah, totally. Risk is like different for everyone, but how do we even figure out what our own risk tolerance is?
Housel says a lot it comes from our past, especially when we're young. That blog post, the one about inflation, it also said if the stock market was doing great or terrible when you were growing up, that can shape how you see investing for like your whole life.
It's almost like our risk tolerance gets set early on based on what we see around us. But if that's true, can we even change it? Or are we kind of stuck with what we developed as kids?
That's where things get really interesting. Housel thinks we can definitely adjust it, but it takes, well, knowing yourself and being willing to look at your own biases. The YouTube video, I think it was, used this great analogy about riding a bike. At first, you're wobbly, scared of falling, but the more you do it, the more confident you get, right? You can handle tougher stuff.
Love that analogy. So it's about slowly trying out different levels of risk, getting comfy with those ups and downs. But that brings up something else Housel talks about, not just chasing returns, but understanding those pesky fees.
Oh yeah, fees. He's big on that. He says they can really eat away at your returns, especially over time with, compounding. Like having a leaky boat, you might be rowing hard, but you're never going to reach your goal if you don't fix that leak.
That makes total sense. So being more aware of fees could actually be way more important than chasing those like super high returns.
Totally. It's about understanding how those tiny percentages can really add up over time. One blog post even said that learning to minimize fees is like one of the most valuable financial skills you can have.
So it's not just about how much you make, but how much you actually keep. Being smart about those financial products and services.
Exactly. And that ties into another thing from the book, Thinking Long Term. Housel says we got to stop thinking about money in terms of weeks or months or even years and start thinking decades.
Whoa. Okay, that's a big shift. But I get how that could change everything from investing to spending to saving.
Totally. One of the book reviews pointed out that this long-term view can really help when, the inevitable bumps in the road happen, helps you ride out those market downturns without panicking and doing something, well, impulsive that could hurt you down the line.
Right. But how do we actually develop that long-term mindset? Especially when everything's telling us to, like, want it all now. It's like our brains are wired for instant gratification, not that slow burn.
That's where Housel says visualization can help. Picture yourself 10, 20, 30 years from now. Ask yourself, what will I be glad I did today? Will you be happier about that impulse buy or about investing that money for your future self?
Huh. Already picturing my future self thanking me for skipping that online shopping spree. But visualizing the future, especially when it comes to money stuff, it's not always easy. It can get really complicated.
And that's where Housel's whole thing about simplifying comes in. He says we make money way more complicated than it needs to be. One blog even talked about financial clutter. Like a messy closet just makes it harder to find what you need.
Okay, so how do we declutter our finances? Is he talking about like budgeting apps and spreadsheets and all that?
Those can be helpful, but he's talking bigger picture. It's more of a mindset shift. Focus on the main goals instead of getting lost in the details of every little decision.
So instead of stressing over every penny, we should be thinking about what we want to achieve and like a simple plan to get there.
Exactly. Creating a framework, so you can make smart choices without getting bogged down.
That makes so much sense. But even if we simplify things, we can't ignore the emotional side of money, right? That seemed to be another big theme in the psychology of money.
Absolutely. Housel spends a lot of time on that, how emotions like fear, greed, and regret can really mess with our choices when it comes to money.
Yeah, it's easy to see how those emotions can like cloud our judgment. Think about FOMO, the fear of missing out. That alone can lead to some pretty bad decisions, like chasing hot stocks.
Oh yeah, FOMO is a big one, can make us jump into investments we don't even understand, often at the worst possible time. And then there's the flip side. Fear can also freeze us up, keep us from taking those calculated risks that could really pay off.
So it's about finding out balance, right? And knowing our emotions are there, but not letting them control us.
Exactly. And one way to find that balance is to get better at, well, financial self-awareness.
Okay, that sounds interesting. What does financial self-awareness actually look like?
It starts with being honest about your strengths and weaknesses when it comes to money. Are you an impulse shopper? Do you hate saving? Do you get easily caught up in the hype? Once you know your tendencies, you can start figuring out how to work with them, play to your strengths.
It's about knowing ourselves, not just our bank balance.
Exactly. And Housel recommends journaling to help with this. Write down your thoughts and feelings about money, track your spending, look back at your decisions.
Journaling can be so powerful for self-discovery, and it seems like it would be especially helpful for like untangling our relationship with money. It can be complicated.
Totally. It can help you see patterns in your behavior, those hidden beliefs, and ultimately make choices that are more, well, intentional.
I'm seeing a theme here. It's not just about the numbers, it's the whole psychology behind those money decisions.
You got it. And that's why the psychology of money is so good. It helps you see beyond the surface and understand those deeper forces.
This deep dive has been so eye-opening. Like I'm seeing the whole world of finance in a totally new way.
I'm glad to hear that. And there's even more to explore. But before we move on to part 3, where we'll get into some even more, well, maybe unexpected parts of this whole financial psychology thing, why don't we take a quick break?
Welcome back to our deep dive. Man, I'm still thinking about all that stuff about risk fees and that long-term thinking. It's like we're really getting into how our brains work with money, you know?
Oh, yeah, and there's more. These sources, they touch on another idea that Housel keeps coming back to, invisible wealth.
Invisible wealth. Okay, that's a new one. Is he talking like hidden assets or something?
Not really. He's talking about the wealth you build by being patient, disciplined, making smart choices, but it's not flashy. It's that money you invest for the long haul, the saving you build up, that security that gives you peace of mind. Stuff people might not see, but it's the foundation.
Makes me think of that saying, money talks, wealth whispers. It's not about showing off. It's about building a solid base for yourself, your family.
Exactly. It often means not spending every dollar, making choices that are good for you in the long run, even if it means skipping some fun stuff now. One blog put it like this: wealth is what you don't see. The fancy car is not purchased, the watch is not worn, the diamond's not bought.
It's like having the freedom to say yes to what matters and no to the stuff that doesn't, not getting caught up in like keeping up with everyone else.
Yeah, living intentionally with your money and your life. And that brings us to something else Housel talks about, that idea of enough.
Oof, that's a tough one for me. How do you even define enough when it feels like there's always something more to want, something bigger, better?
It's the big question, isn't it? Housel says one of the hardest things is getting the goalpost to stop moving. We're told we need more, 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 but happiness doesn't come from just having tons of stuff.
I feel that. It's like a treadmill you can't get off, but it's exhausting. And in the end, you don't really get anywhere.
So true. And studies actually show that past a certain point, more money doesn't make you happier.
Okay, so how do we get off that treadmill, figure out what above is for us? It seems so personal.
It is no magic answer. But Housel says, first, realize happiness isn't just about how much money you have. Having a private jet won't make you 10 times happier than having a nice car, right?
Right. We think stuff will make us happy, but it doesn't always work out that way. But even knowing that, it's still hard to resist wanting more, especially with all the messages telling us what we should have.
That's where being mindful comes in. Housel says, take a step back. Notice your thoughts and feelings about money. Are you being pressured by, what other people have? Are you comparing yourself?
So tune out the noise and focus on what matters to you. Decide what your values are and make choices that fit those values.
Exactly. And be grateful for what you already have. Sometimes we're so busy wanting more that we forget to appreciate the good stuff we've got.
Gratitude is powerful, right? It can really help with that feeling of never having enough. Focus on what you have instead of what you're missing.
And it helps you appreciate the wealth you've built. Not just money, but relationships, experiences, health, freedom. Those are all forms of wealth, too.
This whole conversation has really changed how I think about things. It's not just about money. It's about managing your mind, your emotions. Wealth is so much more than just a number in your bank account.
Totally agree. And that's what makes the psychology of money so great. It's not just a financial guide, it's a guide for life. Helps you understand yourself, make better choices, and live a richer life. Doesn't matter how much money you have.
This deep dive has been amazing. I feel like I have a whole new toolbox for dealing with, well, not just money, but myself too. Any final thoughts or advice for our listeners as they explore their own relationship with money?
The biggest thing is don't wait. The journey starts with a single step, right? Don't wait till you have more money, more time, more knowledge. Just start making positive changes now.
Love that. Even if it's just reading Housel's book, starting a small savings account, talking to a financial advisor, any step is a step in the right direction.
You got it. And you don't have to be an expert to get started. Just take action, keep learning.
This has been so insightful and honestly empowering. Thanks for sharing your expertise with us.
Happy to do it. Thanks for having me.
And to our listeners, thanks for joining us on this deep dive into the psychology of money. Until next time, keep exploring, keep learning, and keep diving deep.